The crypto markets are absolutely surging right now, and accompanying this positive price action that we're seeing across the board is a plethora of very bullish news. So welcome back, everyone. My name is Brendan from Crypto 101. We make market updates just like this one every single week, where we not only go into which cryptocurrencies are surging and doing well by looking at the charts, but we also dive into all the news and explain why this is happening and what you can expect moving forward. So let's kick things off today. What in the world is happening? I mean, Bitcoin, as we speak, is very quickly approaching the $60,000 price point. We're seeing altcoins bring in double-digit returns, just like the Polygon ecosystem that's up over 11.5% so far on the day. And a lot of altcoins are trailing not far behind it, especially over the course of the last week. So what in the world is happening here? Well, in big news, what we just saw was Michael Saylor's MicroStrategy, a company that very many crypto holders are familiar with, just purchased another 18.3 thousand Bitcoin, which comes out to being worth over $1.1 billion. This means that the firm is now holding, or I guess the firm's Bitcoin's holdings have now risen to 244,000 Bitcoin, which is a whopping $14 billion at the current price point of Bitcoin, which is a big deal. So there's definitely some buying happening in the background, but I think the bigger kind of lesson or takeaway here is that big money, institutional money, smart money, they're looking at this as a buy the dip opportunity, and that's what we're seeing. In fact, we're seeing more strength across the board as Parify Capital tokenizes portion of a $1 billion venture funding that's happening on Avalanche via Securitize. Now, it's been a while since we've seen this kind of money get thrown around, especially when it comes to the funding space. You might have remembered back at the peak of around 2021, this was a much more common thing to see. However, as things became a little bit more uncertain, as money became a little bit more scarce in the bear market, we didn't see as many headlines as this one, but here we go. We're finally getting the $1 billion price point thrown back around here, and I would expect that as the market matures and grows and recovers, we're going to see more things like this. Now, another big contributor to this news was that the Bitcoin ETFs, for the first time this month, again, most of last month, if we go and we look at August, it was a lot of outflows. Even for most of this month, last month we saw a lot of inflows. Most of this month, we saw a lot of outflows over here on the Bitcoin spot ETFs. So all the ones from BlackRock and Fidelity and Grayscale, all those players, they had a lot of outscales for the bulk of the end of last month, even leading into the entirety of this month. And it wasn't until this week that we saw our first days of inflows on September 9th, where we had about $60 million worth of inflows, and then on September 10th, where we had a whopping $117 million worth of inflows, which is the biggest number of inflows that we have seen since August 26th. So we're starting to see that the selling pressure, the ETF outflows were actually fading and tapering off, and now the inflows have begun to come in again, which is a big deal. Now, there's also one more kind of economic factor that we have to look at here before we dive into the charts and kind of take a look at Bitcoin as it is just really taken off to the upside. And that final piece of news is the macroeconomic landscape. Now, there's been a lot of certainty on, kind of over here that have made people a little bit more risk off or wanting to ease back on risk. We've looked at the potential of the rate point cuts. We've looked at unemployment. We've looked at inflation. We have the elections coming up here in the States. And there's a lot of investors that are just a little bit nervous about where things could potentially go despite all of this news. And because of that, we saw people dialing back on their risk. And one of the big things that has been kind of contributing to this is, hey, what in the world is going to happen with this Fed meeting? Well, here in the States, we saw that inflation actually cooled down more than expected to 2.5%. Alongside that, unemployment was also showing a little bit more life than we expected it to be. People were expecting it to be worse. It looked like it was kind of settling out a little bit. It wasn't great, but it wasn't as bad as it could have been. And so people are speculating that, hey, if inflation is getting a little bit better, if unemployment is not as bad as we expected it to be, now we're seeing the talks of us going from a 50 basis point cut to a 25 basis point cut because they're saying, hey, the macroeconomic data is actually looking better than we anticipated it to being. Now, not everywhere is saying this. There's other people that are saying, hey, we could actually see a 50 basis point cut still. Regardless of this, we're looking at anywhere from a 25 to a 50 basis point rate cut, most likely happening next week. And that's the whole reason why we're bringing this up in the first place, is that for those of you who don't know that this is happening, this is considered a larger economic event, and the effect that this could potentially have on the crypto markets is still there. Now, even though the crypto markets have very clearly matured into their own industry, they have kind of decorrelized from the traditional markets like NASDAQ and other stuff, I will say that a healthy traditional market enables more people to be risk on with their money. The more money that people have, the more that they are willing to put that into other risk on investments like the crypto market. And if people are not, getting destroyed and short on money, then that's ultimately going to be a good thing for the crypto markets as well. So what we want to see is a healthy traditional market, which could also stimulate the crypto markets even further, which is what I believe we're seeing now, is that some of the TradFi guys who maybe took a step back, took a deep breath, they're coming back to the markets over here a little bit more excited, a little bit more free. And with this, we're seeing a really nice price appreciation on this Bitcoin chart, going back to $60,000. Now, the last time that we have been this high was all the way back at the beginning of this month. It wasn't that long ago. It was about 2 weeks ago on September 3rd. But with this, we're seeing Bitcoin clear above its 20-day moving average, getting back to the 50-day moving average, and we're starting to see some really nice price appreciation here as Bitcoin is getting back to 60K, which will potentially be a resistance zone. Now, if we're able to break here, I think a lot of people are eyeing up that 64K mark. It's going to be right where this yellow 200-day moving average is, up towards the top over here. And that's going to be the next logical area that I think a lot of people are looking at, because this is also where a previous high is as well. Regardless, if we zoom out to the long term of this chart, we saw exactly what we needed to see this week. Bitcoin bounced off the bottom of its range, off the bottom of this falling channel. And with this is a major support zone, and it held. And not only did it hold, but the buyers are very present down here, and they have been buying Bitcoin up ever since it touched the 52K mark just over, I believe it was just over a week ago, or exactly a week ago, excuse me. So the buyers are very clearly present down here, especially in the low 50s. And with this, things really are starting to look good. Now, is Bitcoin completely out of the woods yet? Are we going to see new all-time highs next week? Maybe not that soon. But one of the cool things that we have seen, and I think we talked about this in last week's market update, is that with September being the worst performing month for the crypto markets, what we saw that the following month, out of the dip that September brought, it enabled October to be the highest performing cryptocurrency or Bitcoin month in the last 10 years, with an average return rate of over 20%, whereas the average return rate in September was negative 5%. And so out of the dip that September brings, we typically see a really nice pump going into October, which is just another sign that, hey, this could have been a buy the dip opportunity. Or if we do pull back even deeper here, or once again in September, that again could be a potential buy the dip, historically speaking, off of the last 10 years of data that we've seen. So if you're interested more in that, I know that we talked about it over on the Crypto 101 podcast channel in our weekly crypto rundown that we do every single Wednesday. And if you all want to get more plugged into the crypto space and join a really cool crypto community, we got a great one over here called Crypt Nation. You can check out some of the links in the description down below. And you can also check us out for more content on the Crypto 101 podcast YouTube channel as well. So thank you all for watching. I hope all of you have a fantastic day. And until next time, we're going to see all of you at the same time, same place next week.